Hey guys, I'm the new investor. In this video, we'll be screening TXN through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. From there, we should see if the stock is a buy or not at the current prices. Through these metrics, we can also get the best entry prices for the stock. We'll also be looking at their charts to confirm our entry prices. Texas Instruments, or TXN, is my top semiconductor stock next to Intel and Nvidia. If it isn't as expensive, this is actually my hedge against Intel. TXN is one of the best semiconductor stocks to buy in 2022. Later on, you'll see why I like the stock because of their financials. It is also one of my only 6 strong buys out of the top 50 US markets by market cap. But until now, I still haven't bought the stock for probably the dumbest reason possible. The dividend yield. I like me some dividends, and I have to buy stocks at the right prices for the right yields. I'm just waiting for that 3% yield. TXN is currently trading at $172.32 with highest price of $202.26. That's 14.8% of the highs. Current market cap of 159.15 billion with PE ratio of 20.85. They give out an annual dividend of $4.6 per share, a yield of 2.67% of the current price. First metric, we want an EPS multiple less than 3. It's 2.52. We get this by dividing the PE by the EPS. This metric tells us how much we're paying for the stock based on their current earnings. This means we're only buying the stock 2.52 times their current earnings. I've included here the EPS and the OSN, or number of shares over the years. We want EPS increasing and OSN decreasing. If you're in it for the dividends, I'd say it is safe at 55.69% of their earnings. We want this below 60%. Second metric, we want to pay $1 or less for 1% of the money they're making. This is based on the lowest yield between the net income and free cash flow yields of the current year and the 5 and 10-year average yields. The more data, the better. But in this video, we'll only be using 5 years of data just to show you our process. This metric tells us how much we're paying for the stock based on their yields. What you see here is revenues deconstructed. The above values are in billions. Below are in percentages of their respective revenues. I call them yields or margins. These are the costs and expenses they use to make those revenues. The income they get off of those revenues, which is reflected in the EPS, and the free cash flow they generate off of those revenues. I'll show you the relationship of the cells. I've also included here the revenue growth, as my second metric does not account for the loss of revenues like any other processes out there. They will still make the same yields even with declining revenues. That's why it is important for these companies to maintain or grow their current revenues. From this data, I don't think we should pay premium for the stock. Of the 4 highlighted values, we'll take the lowest yield to divide the current PE. Why the lowest yield? And why did I include the net income yield? We want to take the lowest yield because we want to base our assumptions at the lowest possible yield. I've included the net income yield as I thought it's also important, as EPS is based on it and not on the free cash flow. Our discount is 0.61. It means we're only paying 0.61 times their yields if we buy the stock at the current prices. That's 61 cents for $1. This is why I like the stock. Look at this. Look at these yields. Very consistent and very attractive high. Third and last metric, we want to know our discount compared to when the markets have valued the stock before by looking at their historical PEs. I have here 2 historical data. One from Guru Focus, where this data is readily available, and the other from Macro Trends, where I took the PEs manually from the range of consolidation the stock has traded before. You'd see here the highs and the lows of PEs it traded, and the number of quarters I took the data from. Of the 2 highlighted values, we'll use the lowest historical PE to divide the current PE. For the same reason, we want to base our assumptions at the lowest possible PE. We have a discount of 1.06. It means the stock is still trading around the historical PEs. In conclusion, the stock beats 2 of my 3 metrics. The stock is trading at a discount as it trades at 2.52 times their earnings, 0.61 times their yields, and just 1.06 times their historical PE. I don't own the stock yet. I don't think we should pay premium for the stock as revenue growth is at single digits. Would I buy? Yes, but I'm still waiting just a little bit more. Here are my entry PEs and prices. 18, 20, 22. I base these entry PEs around their historical PEs. The fair value of TXN stock, based on my three metrics, is 285. This is what we get when we multiply the EPS in my first metric of 8.26 and the lowest yield in my second metric of 34.31. I'd advise you to put an alarm at 180s and make that a ceiling of your entry prices. Looking at charts, I'm looking at the support levels at 160 if the stock finally goes down and breaks this uptrend consolidation. Check this trend line as well. This line connecting back from 2018 to 2020 highs. Check if this stock bounces or drops on this line. We want to buy below 180. This is our ceiling entry. The stock is trending higher slowly. Let's see the next couple days if this continues. My 3% yield is at 150 levels. I don't know if we'll ever reach that level, but I'm hopeful. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price we pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research. Hey guys, I'd love to hear from you. Are you looking to add stocks into your portfolio? Or open new positions but you don't know the best prices to enter? Or you're okay with buying stocks at a premium? Maybe I can help. Let me know your thoughts down in the comment section below.